You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. At Fidelity, you'll always get a great value for your options trades. And with powerful investing tools that provide clear next steps, plus independent research and a wide range of investment types, we can help you make better trading decisions. Learn more about options trading with Fidelity at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike TOSAW from RCM Asset Management, Andrew the Rock Lobster GIOVINAZZI from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody, that rockin' bit of tunage means it is time to rock out once again with the option block, everyone's favorite bi-weekly source for all things options related, some wit, some wisdom, some analysis, some unusual activity, a little bit of strategery, a whole bunch of your questions, mix it all together with a look into the future. You got the option block. Welcome. Glad you could join us here. This week's flying by. It's already Thursday with the option block. Things are cranking. Moving like crazy. Hopefully you've been enjoying the slew of content that's been hitting you all week. Of course, you can get it wherever you get your finer podcast programs. Grab the app if you haven't checked that out. It's got all the shows baked in there. Makes it easy for you guys to really get into the archives a bit, which maybe some of the other portals like your iTunes and others maybe limit you to more recent episodes. The app lets you get deep, which if you want to go to other shows, even like Options Boot Camp or other ones like that, makes it easy to do. And, of course, this one goes way back. many, hundreds of episodes now. So if you want to go deep on this one as well, the app's the best place to go. Of course, wherever you listen, including live right now via Mixlr, it seems to be working, so fingers crossed for that. Make sure you hit us up, questions, comments, insights, pearls of wisdom. We do indeed enjoy hearing from you guys. And let's see who we're enjoying on the program with me today. Let's go out to the hot seat. He hasn't been on in a little while. Happy to have him back. He is the father of the last son of Krypton, a.k.a. Mr. TREY JARRELL, holding down the Fidelity hot seat over there. TREY, welcome back to the program. I hear you want a little bit of vacation because the last emperor was just locking down the seat in your absence. He was on the show pretty much every day. So where did you go? Did you do anything fun, and what's up with you?
Yeah, doing well. It's been so long, I was worried I'd have to reintroduce myself here at this point. But as the last emperor mentioned, he's been holding it down for us. We always appreciate him presiding over everything as the rest of us get to take some vacations. But had a good time off. Actually went to visit the great state of Maine. I don't want to give too much away. I was in the coastal region here, though. It was nice to cool off
it was you. You were the one stealing all the Rock Lobster's clams. I thought I recognized the guy in that picture he sent me. Oh, okay. Hopefully he didn't shoot at you.
No, I didn't pick any clams. Did enjoy the fruit of other people's labor and getting in the mud to get those, though. Always a delicious treat up there.
Well, glad to have you back. Yeah, that you got to watch out for that last emperor there. He was elbowing everybody out of the way to get into, I should say, onto that Fidelity hot seat there. So watch out for him. If he's peeking at you even right now while we're doing the show, that's why. He likes to sit in the old hot seat. Speaking of the man who's always chasing away those clam poachers, let's check in with the old rock lobster himself, Mr. Andrew GIOVINAZZI. Andrew, did you enjoy hosting TREY over the last couple of weeks up there?
You know what? I did. I did see him I did see him poaching, but I thought better of just putting a cap on him. So I thought I'd just chill. I just chilled and let him do his thing.
It would kind of put a downer on the show if you shot him. Yes.
Yes. If we shot one of the sponsors' guest hosts, I think they would look sadly at that as not treating their people very well.
Yes, probably take a dim view of murder of their representatives on the program. I think you should just invoice Fidelity for the many tons of clams that he poached from your bay there.
I think, well, gosh knows, what Fidelity is a giant multi-billion-dollar operation. I'll invoice them for $23. I wonder how long that will take to get that $23 back.
Yes, the approvals alone. 2 years from now, you'll get your check for $23. And also joining us in a little bit more tranquil, was no one stealing clams. No one's shooting at each other. It's just happy all the time. Of course, St. Charles, where we are joined by good old Uncle Mike TOSAW from the appropriately named St. Charles Wealth Advisors. Uncle Mike, welcome back to the program. To you as well, sir.
Always happy to be here, and have not done any clam poaching yet today. Not planning on it either.
But the day is young. You never know. You never know where the day may take you.
Point.
After you get on the option block, you never know what might happen. We know what's going to happen, though. We're going to head right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody. Welcome to the Trading Block. And it looks like here, that Powell put back in effect. It used to be the Trump put for a little while. It was Bernanke back in the day. Now it's the Powell put, and it appears to be in full effect. The market's liking what they're hearing out of the Fed chief yesterday and indeed today, rallying yesterday, rallying even more today, coming into showtime here. S&P up about 0.2%. The NASDAQ, a rare day of being the laggard of the bunch, only up about 0.15 or so. And the Dow leading the charge, up nearly 0.75%. And, of course, all this green on the screen means VIX cash, at least, has been just annihilated over the past couple of days. Broke through the 13 handle yesterday, today down to 12. Actually touched at the 13 handle at the close. I think it might have broken intraday, but today we're well south of it, 1281, 1275 actually now, ticking down even more. So, yeah, not looking good for either of our prognostications for volatility views, Mr. Rock Lobster. In our defense, though, we were not prognosticating for this week. We were doing it for last week, and there was no show, of course. So we can all look back and see how the numbers worked out. And you can't stretch a prediction into 2 weeks. It's just too much, don't you think, Mr. Rock Lobster?
Well, I think a 1 week prediction is pretty tough, but trying to get your 1 week to fit on a 2 weeks, I think that's asking a lot.
That is asking a lot. I mean, I'm pretty good, but that's stretching my powers to the brink. Aside from neither of us hitting the bullseye, what else is going on in the world of volatility, sir?
So I think a couple of interesting things. One is from the curve shape, it's only in 2019. We haven't had this very much, which is what I would call a very healthy contango, meaning like the future premium is relatively high, VIX cash is relatively low. Like the way I look at sort of a little option pit fair value, secret sauce thing. Actually, the futures are a little bit expensive relative. Not a lot, but a little bit. We just have seen that almost nothing at all this year. And usually that bodes poorly for VIX. It's kind of the VIX futures work weird, but like the more premium that's in them, it's almost like, they're expecting the cash to kind of move even lower. I know that sounds kind of weird, but so at least right now, because the lower the VIX goes, right, then the higher the cash gets. Because if you think about it, VIX cash goes down and down and down and down, and these, because people aren't stupid, they're like, okay, 11 VIX is the bottom, right? So you would think the future traders are going to charge the max they can for the futures. Like, okay, well, VIX is 11, so I'm going to charge $15 for the future and make everybody pay through the nose. So that's kind of how it works. That's an exaggeration, but that's kind of how it works. And right now you have VIX trading a little under 13, and the August future is 1540, and the future for next week is 1367. So you could make a case for like a 12.5 cash into next week, which means that's a whole dollar coming out of July. So there are trade ideas for that, things that you can do. We had something in our little chat room yesterday, kind of on that whole idea. But basically, my only guess is without the Fed actually saying they're going to drop rates by 25 basis points, which, we all know that's not very much. It's not going to make a whole lot of difference. It's just the fact that, the change from December to July is, we recognize this Chinese war thing might become a problem. So we're going to get ahead of it a little bit. And if the Chinese war thing, trade war thing gets fixed, I can see that 25 basis points coming right back out again in a heartbeat. Hopefully they will anyway. Try not to recreate the two cheap interest rate problems of the past, but that's where vol is. I don't expect VIX cash. I think it'd be hard for it to go below like 12.5, 12.25, just because you have this event coming, and it's just hard for the vol to get that low. So everything in the vol product land is going to be a little slower, at least until the end of July when we actually hear that rate stuff. So, if you're a VXX trader and you love that erosion trade, I think it's going to be it's a slower erosion, and we might see actually quite huge erosion, toward the end of the month once this news is out. So that's what I see in vol land, and 3,000 SPX is 3,000 SPX. So I know there's somebody in our midst that can't wait to say something. So I'll leave it at that.
That Chinese war thing, I think you might be onto something. I like that. That Chinese war thing. That's a good way to put it. I think that's it just summarizes all of our issues in one fell swoop. But the erosion traders can't be mad. They've had a good little squeeze of late, so it's not like they can really shake their fist and say, I want a teens in the VXX right now.
Right, no. It's it has been okay as long as you didn't screw it up, but it hasn't been bad.
It has not been bad indeed. And speaking of the aforementioned person who just cannot wait to shout from the rooftops whenever we're at all-time highs, of course I'm talking about TREY. No, I'm just kidding. Talking about Uncle Mike. Shop at the bit here. Uncle Mike, sir, if you want to have at your catchphrase, now is the time.
Never before in the history of the entire stock market has there ever been a better time to sell than right now. We are at new all-time highs. Excitement is in the air. Lot going on right now. I think that with the all-time highs, we're around a key number, and that's 3,000. And if you look at a chart from a few years ago when we were around the 2,000 mark, we stayed around the 2,000 mark for a long time. So what I want to emphasize to people is that there might be better times to sell in the future, but there's never been a better time to sell than right now because we are at all-time highs, and keep that in mind. When we are at all-time highs like we are right now, volatility does become relatively cheaper, so you may want to consider looking at buying, doing more option buying strategies. A couple other things with which to consider throughout this is that you need to continue to manage risk in the ways with which you need to maintain your current goals and objectives. But the main thing that we need to do after we're done celebrating the all-time highs, you see people on TV wearing the S&P 3000 hats, is to keep this in perspective. In that the market is up S&P is up roughly 20% on the year, and we're in July. So with that, now I understand that we had the pullback last December, and so a lot of that 20% is making up for the pullback that we had last December. But the thing to think about with this is that when we have that much of a movement that quickly, oftentimes there are some times that the market will scale back. Now, is it going to happen now, later? Who knows? But if you do feel that you have had some nice profits over the course of the last 6 months, now might not be a bad time to take a little bit off the table. Not because I'm bullish or bearish or whatever the case may be, but I think it's important to manage your risk and don't let a good year turn into a bad year, because I'm willing to bet that in my bull camp out there, there's a lot of people that are having good years right now. So keep that in mind as you're going through this. A couple other things with this. Metals are silver is relatively flat right now. The downgrade in Apple seems to have pretty much gone away in terms of the price movement with Apple. Not a lot of things happening there that are really all that bad. And with the China war thing, we're not into the single-digit VIX by any means yet, but I think there's a lot of things happening with it, and a lot to watch. But the main thing that I'm watching is the 3,000 number in the S&P.
If I can read between the lines there, clearly, Uncle Mike, you're telling everyone to liquidate all their holdings and go to cash, right, sir?
My 50% guarantee, as always.
So go straight to cash, post haste, says Uncle Mike. Do not pass go. Do not collect. $200. All right, and joining us, of course, in the hot seat. He's been waiting patiently in between, maybe going out stealing a few more clams in between, but he's back now. Mr. Trey, Jarrell. Trey, these are obviously hot and heavy times, unusually hot and heavy times. Usually this time of the summer, getting into mid-July or so, not exactly boom times for the market or action, yet we're seeing both of those. What's lighting up the tape over there in Fidelity these days, sir?
Yeah, a lot of interesting stuff here today. A lot of interesting news this week. And as always, I'm always excited, too, about all-time highs. I'm waiting for the S&P 3000 hat to come from Uncle Mike. I'll keep checking the mail. I'm sure it'll be there any time now. But, big news here today, orders by Fidelity customers. A couple of our top two, ones that, have been up there. I think the last emperor mentioned both of these, here on Monday. Amazon today coming in at number one. Fidelity customers just slightly on the sell side on Amazon at 52% sells to 48% buys. But interesting chart. It was a little bit higher earlier today. We're kind of keeping an eye on that 2031 level. Always fun to say. $1 trillion market cap, which is a level where it would do that, but it has pulled back a little bit here since that at 2021 here right now. Had some really not great news, right? France had mentioned the digital tax here today would be impacting Amazon, but seemed to shrug that off here and still positive here on the day as well. Option market, a little interesting in Amazon too. We see that really heavy call side here today, about 101,000 calls to 57,000 puts, so just under 1.8 call put ratio. So option market at least early was kind of leaning towards the call side here as well today. Number two, I mentioned AMD. Been very interesting to keep an eye on this one. It was near that 34 price level here that it's really had some trouble with over the past year. The last couple of times it's hit it, it's reversed off, approached it again today, but pulled back down right now at about 33, 31. So the one that really has been, I think, interesting in the headlines today, which popped up at number 4 on orders by Fidelity customers, is CVS Health. So interesting stock, interesting news today. So this morning, Trump administration withdrew the rule that would kill the rebates, and we see healthcare kind of all over the place today. The healthcare providers and services like CVS up big, pharmaceuticals, biotech pulling back here a little bit. But took a look at CVS's chart. Here over the past year, been a rough year. Right, high is at 82 at the end of 2018. Really strong pullback here, like the rest of the market as we went through December, but didn't have the recovery with everything else, right? Come February, another strong pullback on that. And really since March, it's been trading range bound, right in this 52 to 58 range. Hasn't been able to really get traction one over the other. Seems to have stabilized in that range, but had trouble breaking through on the last earnings. So, today's news really pushing the stock up about 4.5% right now. Just under that 58 level here, pulled back a little bit from the day highs here, but interesting to see that type of strong move in it. And option market really really following suit here on CVS. So calls coming through strong, 91,000 calls versus 37,000 puts, so about 2.5 to 1 call put ratio now. And CVS, and this trades 90-day average volume about 46,000, right? So and just under 130,000 right now. So, certainly heavy interest in the option market. Certainly some interest from our Fidelity customers here today as well. Fidelity customers, oddly enough, taking the other side. A lot more sellers here in CVS today than buyers. We got about 66% sells versus 34% buys. So maybe some of those that bought in this narrow range looking for an opportunity to get out on the big move that it has here today. So last one I wanted to make mention of here today was rounding out number 5 on our orders by Fidelity customers, which was Nvidia Corporation. So certainly we talked about AMD. Chip makers have been in the headlines here for a while, but Nvidia, big day today, up about just over 4% right now. 166.95, up 6.89 points. So strong upside day. Not much I saw in the news here for today. Analyst upgrade here, but not too much beside that. Been an interesting chart here on Nvidia. We know that had the really big sell-off here from October last year, trading around that 290 level, and just all the way down to lows below 130 that it hit in December. But since then, started to pull back a little bit. Got as high as 190 here in April, but really pulling off since then. Right now, today's big strong move still hasn't under that 200-day moving average, which we like to look at for giving us an idea of long-term trends. Still below that, but very close to 200 days at 173. So that'll be kind of the next level I'd be paying attention to on Nvidia. See what it does, if it manages to get to that moving average and break through, or if it reverses down like it's done the last couple of times we've approached it here. But, option market, right, heavy on the call side seems to be the theme here for today on the big upside. About 136,000 calls on Nvidia versus 71,000 puts, about 207,000 options contracts traded today versus its ADV of 146,000. So certainly a lot of interest in the option market here, as well as with our Fidelity customers. And, Fidelity customers almost 50-50 on it, just a slight advantage to the sell side, about 53% sells as it stands right now. So a few customers maybe taking advantage of the opportunity to sell, but still pretty heavy interest in the buy side as well today. So that's what I've been keeping an eye on here today from our Fidelity customer side.
All right, let's see how the broad market is keeping a pace with what Fidelity customers are up to out there. A decent volume day coming into showtime. Not a huge amount of paper hitting the tape today. VIX, a little north of 250,000 contracts. ADV, a little bit north of 400,000 right now, 421. So ticking up a little bit out there in ADV, but still pretty light out there. SPY, a little bit north of 1 million coming to showtime, about 1.1 million. ADV, about 2.3 million. SPX, well shy of 500,000, about 412,000 contracts. ADV, about 1.25 million. The Q's, 370,000 contracts. ADV, about 612. And the Russell, a.k.a. IWM, doing probably the best percentage-wise of its ADV of the bunch, 233,000 contracts coming into showtime. ADV a little bit shy of 300,000. Let's move on to the most active single-name equity options out here. Number 10, Micron. Icon's been lurking in that top 10 for a while now, 109,000. Bringing up the bottom of our list here. Number 9, Snap, $1.15 on the tape. Number 8, CVS, as the last grandfather of Krypton told us earlier. Fidelity liking it. The broad market liking it as well, to the tune of 118,000 contracts over there. Number 7, Tesla. It's actually a rare visit to the bottom half of the top 10 there for Tesla, 121,000 on the tape. Number 6, Facebook, $1.24. Number 5, Amazon, 136,000. Number 4, Neo. Neo's been lurking in the top 10 for the last few days. That continues today. 150,000 on the tape coming into showtime. Number 2, Nvidia, $1.76 on the tape. Number 3, Nvidia should be number 2, AMD, $1.90 coming into showtime. And number 1, guess it. Yep, it's Apple. Apple's been out of the top 3, I would say, for the last couple of days. Hasn't been out of the top 5, I don't think, but it's been pretty close. Apple, though, taking the top spot yet again. It's amazing how all those downgrade woes and everyone all hand-wringing and all these concerns, oh my God, wither Apple, wither the market now that everyone's downgrading them. And there were a surprising number of analysts. Someone broke it down for us. They sent us a link, and they showed that of the analysts covering Apple, some absurdly large percentage has it as a sell or a hold, which a lot of people know a hold is kind of effectively a de facto sell rating. That's a far cry from a few years ago when Apple was the darling of the street. Today, getting a little bit of love out there, up not quite 0.1%, but north of that 200 handle yet again, 203.41 here right now. So yeah, I guess charging more for, I believe it was the MacBooks and a few other things. That's how they're going to make up for the shortfall in iPhones and iPads and everything else. Just going to charge more. It's basic economics. You charge more, people buy more, right? Isn't that how all that works? Oh, wait, maybe not. But apparently the market liking what they're seeing, what they're hearing from Apple out there. It's a quick glimpse, too. Coming up, we are getting into the teeth of earnings season again. It kicks off next week. If you guys want an advanced preview of all that juicy goodness from an earnings volatility and straddle perspective, head on over to theoptionsinsider.com. Click on the Options News and Articles tab on the top there. You'll get out there to the earnings move and earnings move results reports. We got a new one out there from our friends over there at ORATS breaking down all the goodness coming up next week. So that's Netflix, that's eBay, that's you get all the financials, JPM, Wells Fargo, Goldman Sachs, Citi. You got the airlines, United Airlines, Delta, American. All of them are in there with their breakdowns, what the market is pricing, how that compares to recent history, all this good stuff. Check it out. It's free. You really can't argue with the price. TheOptionsInsider.com is the place to go. If you like it, head on over to ORATS, ORATS.com. Tell them we sent you. They'll be happy. And maybe sign up for some of their premium stuff. A lot of good stuff there, back testing and everything else. A lot more data to be had in these reports as well. Meanwhile, though, it's time for us to keep on rolling to get a little weird. It's time to move on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by TheOptionsInsider.com. It's time for the Odd Block.
All right, everybody. That funky tune means it's time for the funky portion of the show. It's time for the Odd Block. Let's kick things off. You guys know, if you're listening to the network for a while, you know I like myself a good ticker, an appropriate ticker. This one's a good one. Even though it is kind of misleading, it could apply to many names. It's just apparently Avis snatched it up first. I'm talking CAR, ticker symbol CAR. This is, of course, for Avis Budget Group. Trading today about $35.75, up nearly $1, so a good day, nearly 3% for Avis. This is the name that's kind of been, looks like pretty range bound, even though it's been a decently wide range. About the beginning of actually a year ago exactly, they were trading right around 32, so about almost $4 shy of where they are right now. Then they spiked up in, looks like around August, they spiked up to about 38, almost 39, and then they kind of sold off again slowly over September, October, and November, down into, of course, the nadir of Christmas Eve, right around 22.5 or so. And then they kind of bounced right back up. By early February, they were back into 28, 29, then back by the end of February, March 1st, they were trading 36.25 again, so pretty much right where they are right now. So they had that little blip, and then they kind of just rallied right back up here, and then they kind of been vacillating in this range. Had a little bit of a sell-off again, looks like in May. They hit 37, and then they sold off again in a couple of weeks, down to about 28.5 over the course of the month. So not a great month for them. I'm guessing all these imports, tariffs, and everything else, not exactly a boon for their business. And then lately, they've kind of been back on the upswing again. So they've gone from 28 back to about 35, where they are today, including today's $1 rally. So what an interesting saga it has been, from about 21, almost 22 on the downside to nearly about 39 on the upside over the past year for Avis. Let's see what we saw here. This is also pretty much the largest single name option print we saw going up today. It was out here in Avis. It was the CAR AUG 41s going up for 35 cents. Someone lifting the offer 20,151 times. So they were 20 cents at 35, and somebody wasn't playing. They said, I'm going to take that 35. I'm going to take it for all you got, to the tune of 20,000 and change. Clearly, this is opening. Not a lot of 20,000 prints going up in CAR, I would expect these days. There are earnings. The earnings are the 6th, so this is an earnings play as well. So, Mr. Rock Lobster, this is kind of old school Odd Block, which is kind of nice, kind of refreshing, not some weird obtuse thing. It looks like we got some old school size near out of the money call love with some earnings juice built in. What say you about this one, sir? This is kind of back like Odd Block 101 here.
Maybe like 8 years ago.
Yeah, pretty much.
Sometimes people just want to buy calls. It's a weird one. I'm also looking at some other volume. Somebody's paying a dime for the July 1939s for next week. That's pretty dang bullish. So there's definitely upside call up for here. So they're expecting like 28,000 of the 41s have gone up now. I mean, doesn't this smell? Remember, like it feels like a million years ago, but we used to say this feels like like a newsletter trade where there's just size, like all kinds, and then all of a sudden your big print goes up, and then pile, and then and then like everybody piles in for the rest. So, somebody buys 2,000 of these, and then like hundreds trade afterward in small lots. And this is. You have 28,000 on the day, and the first block was 20,000 at 35 cents. And lo and behold, they're trading 65 cents now. So the Mr. 35 cent guy or girl, they're doing quite well. What a shocker.
They're laughing all the way to the bank, but you're right. A lot of, shall we say, ebullient, joyous paper going up here. 2,000 of the AUG 40s going up here today. 1,000 more of the AUG 41s, like you mentioned, total of nearly 30,000. Of the AUG 41s have gone up today. They've traded so far today, Avis, or CAR, I should say, has done 28.3 times their average volume. So clearly, the game is afoot out here in Avis today. I like that. Sometimes people just want to buy calls, Mr. Rocklobster. That's totally true. Sometimes people have the love, and you're right. They're getting near July 39s going up. You're right as well, about 700 of them for a nickel. Getting a little bit aggressive there, but you're right. All upside love here in cars. So clearly, maybe one to keep an eye on here, listeners. Maybe if you like these trades, again, don't just piggyback on them. Use that noggin, use that noodle of yours. Maybe take advantage of some of all this good upside juice people are building in with all these size trades. Maybe you want to leg into a vertical or two. Take advantage of some of those upside juice to sell. So a lot of things you could do if indeed you do agree with this outlook. But still, this is going to be one. This is too sizable, too weird to ignore. We're going to put this in the to-be-watched category. We shall return to this, Mr. Rock Lobster, to see if indeed the size money is the smart money. If you listen to this show, that it usually is not. But every now and then, it hits one out of the park, like the infamous Men's Warehouse trade of a few years ago that shall not be mentioned ever again here on the network. All right, let's move on here. What else do we have now? If you're talking car, right behind it, hot on its heels, we're talking Carvana. Oh, this, I believe, actually, if this is what I believe it is, I think, Mr. Rocklobs, I don't know if you have these in Maine. I saw one of these for the first time. If this is what I believe it is, I think it is. Just driving out through the hinterlands of Chicago, not far from St. Charles, actually, I saw this giant, what looked like a car vending machine. Have you seen one of these things? It's about like a 5-story glass tower filled with cars. And you go to it, you negotiate a price, they give you a giant novelty token, you put it in, and you flip the trigger, and your car comes down the vending machine.
You know what? All I can say is how that vending. Can you imagine what it costs to build that vending machine just instead of putting asphalt on a lot? I guess it's a business.
But we're not talking about asphalt on a lot. We're talking about the vending machine to 10,000 people, and they just got free advertising from all of us.
Yep, you're right.
I guess so. I like the idea. Would it fly in Maine? Maine only has like 12 people, so I don't know
if that would work. But yeah, just something just fun and celebratory about getting a giant novelty token to buy your car. It makes it much more fun than the typical. You go to a used car lot and some guys giving you a shady deal. I believe they are mostly used cars, the Carvana. I don't think they're new.
Right.
So yeah, either way, look for them if you can. They're weird. I saw one again the other day in the west coast of Florida when I was down there in the southern studio. So apparently they are many and prevalent. Look near
$10
you.
$10 billion market cap.
Yeah, there you go. I guess. What are we doing here? We should have been making used car vending machines this whole time.
Maybe it's a real estate deal, like whatchamacallit, like McDonald's. It's like it worked for Ray Kroc. He's like, okay, instead of vending burgers, they're vending cars, vending used cars that are all shiny and new. So
I guess if you got to think of a way to sex up the used car sale a little bit, I guess a vending machine, I guess you could do worse.
Yeah, and I think somebody here, I'm just looking at the chart of this stock as, $60. It looks like, I think somebody could be speccing a little earnings type of play here. Although we got May, June, so this isn't really earnings spec. This feels like a good old fashioned, just a little put spec.
Why don't you break down what the trade is then for our listeners here, sir?
It says July 60 puts. I jumped the gun on this one.
It's not like you've ever done this before or anything.
It's not like I've never done it before. July 60 puts. Somebody paid 45 cents. There wasn't much offered at the time. There isn't. So. This was one we usually, when there's a big put purchase, somebody kind of buys stock with it. But it feels like this is just a good old spec on, somebody that has the same idea we do. Why are they buying? Why are they buying so darn many of these puts in here? Earnings really aren't a factor, so it is a strange spec put buy. That's for sure.
And this one's kind of been all over the place from a stock perspective, which I guess is befitting a used car vending machine company. This thing, it had a 52-week range, Mr. Rock Lobster, of 28.5 on the downside and 76.85 on the upside. So this thing's been all over the place over the course of the past year. So in that light of that range, these 60 puts don't seem as outlandish. Maybe July could seem a little outlandish because the clock's ticking. But the 60 strike, I could certainly see why if you had some of this, you'd want to lock in a little bit of a hedge. I don't know if I want July. You're right, particularly because it doesn't even get you earnings. Our earnings are August 7th in this name, so that makes it the immediacy of the timing makes it a little bit of a head scratcher. But yeah, 5,000 July 60 puts listeners going up. Paper lifting the offer for 45 cents, opening over there on the Amex. Tell you what, just because it's fun talking used car vending machines, I'm gonna put this in the to be watched camp as well. Let's see how our friend fares. Speaking of things to be watched, we like to come back. You can never escape our gaze here on the option block, listeners. We come back to trades that we find intriguing or make us go, And now we're going to do that. We're going to go back to a trade we profiled not too long ago, June 3rd on the program. We highlighted one of the Rock Lobster's favorite strategies, line in the sand puts, someone blasting away at some puts. This time they were in Guess Inc. At the time, they were nearly 12,000, 11,914 of the June 14 puts going up a little bit off the bid for 28 cents. Paper did it, I guess, is opening on the Philly. The stock on that day when the trade went up was at about 16 and a quarter. So these were fairly out of the money puts at the time. This one, if you watch it over the course of the subsequent weeks, it didn't have that long to go from the 3rd to expiration. It wasn't too long. It was a little bit of a longer cycle. Expiration was on the 21st, but still, not that long of a run. But still, these things got a little dicey. The stock dipped quite a bit not that long after the trade. In fact, it dipped below the 14 handle very briefly, got down to 13.88, right around the 13th or so. So this one, if this guy was watching this one, maybe if he didn't want to buy himself some stock, he was maybe holding his breath a little bit, but it ended up working out in his favor. The stock retraced towards the final week there going into expiration. Going into expiration, these puts were still open. In fact, there were more than 14,000 open on this strike as of expiration. So these bad boys went out worthless. The stock went out 14 and change, I believe, on that day, 14.30, something like that. So they were out of the money, but it wasn't all smooth sailing. This guy had to, as you typically do when you're selling premium, you can have a few moments there where maybe you second-guess yourself. But our friend didn't pull the trigger. He didn't roll. He didn't get the heck out of Dodge. He kept his composure. Maybe. I don't know. Probably popped a lot of Tums. And at the end of the day, it looks like he pocketed a cool $333,592. Mr. Rock Lobster, he made some money, but he had to sweat for it a little bit. What do you think of this one, sir?
I think, as much as anybody can earn money trading options, I think they did. They had to sweat it out. But the key with line in the sand puts is you have to be able to afford the line in the sand that you draw. So I just say there was a little sweat there, but overall they made, it's always like Ferrari money. Don't you notice that? It's like just enough to really buy a really nice car. That's what it seems to me on the stuff, though. I think maybe it's the guy that owns Guess. He's like, I want a new car, and I already own like 1 billion shares, so I'll sell. I need to sell 12,000 of these things, and I'll get myself a new car, and I don't want to have to work very hard for it. So that's what it feels like on this one.
And it feels like to us that it's time for a little bit of the old mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. This is indeed the portion of the show where we talk about a little bit of your mail, what you guys have on the old brains. We also ask you guys questions sometimes. Last week we asked you guys about your strategies going into these all-time high markets, which was the case last week and is still the case this week. And I'm not sure if I broke it down for you on the show, but it ended up being pretty evenly split, actually. We gave you 4 choices: protective puts or put spreads, covered calls, short puts or put spreads, or collars / the old bearish risk reversal. And in roughly a third, actually exactly a third, 33%, saying short puts or put spreads winning the day. So even the fact that the vol is eroding, we're at all-time highs in the equity markets at least, you guys still want to harvest the old risk premium, and then exactly 30% each for protective puts or put spreads or covered calls, and then only 7% for the old collar or bearish risk reversal. So not a ton of love for protection, but I guess if you add in the collar with the protective puts, you're getting a little bit north of a third there. So I guess if you add all that up, people are slightly inclined towards protection, but not a ton. We had a bunch of comments on different strategies from there. Momentum Hunter saying, you mean with a new trend developing here, long stock, long calls. So he says there's a new trend developing in the market upside, he says, and long stock. He wants to be long stock, long calls, and trailing stops on all positions. So he's super bullish. He's long stock and long calls. He doesn't. One of them is not enough. He's got to be double bullish here. David Neff saying, call me a dope, but I'm still long puts, calls, depending on the immediate situation, pretty much working. So he's got a more nuanced approach, which is what we advise here, which is, depending on what's setting up intraday or maybe on a little bit shorter term horizon, you set up depending on what your viewpoint is. So we can get behind that there, David. And thanks for everybody else who chimed in. Our question this week is along a similar line. We've got, let's see, once again, hitting new highs, vol eroding yet again. We talked about it under the 13 handle now out there in VIX land to spikes. So what are you guys doing to feed your volatility love out here, your volatility lust? What are you getting? Where are you getting your vol fix these days? Gave you 4 different categories to choose from. Energy, could be WTI, could be USO. We don't judge. It has been moving. We'll get to that a little bit later in TWIFO. There is some vol to be found in the crude land these days. Metals, metals for a long time, gold in particular, was kind of dead money from a vol perspective. And then last couple of weeks, not so much. So that's maybe an interesting area you want to turn your attention to. Crypto, man, talk about vol, the realized vol, at least on our show on Monday. I haven't checked it since then, but on our show on Monday, the realized 1 month vol of Bitcoin was at around 125. So things moving, and it's swinging a couple of hundred, couple of thousand handles a day as we speak. So I'm guessing that vol has not come in substantially. Or are you staying with the old index vol? Pick your poison. Could be VIX, could be spikes, could be VXX, whatever floats your boat. Let us know. Let's go back around the horn. Let's start with the last father of Krypton, shall we say, Mr. Trey. Do you have an area where you're looking to get your vol fix these days? And then B, more importantly, what do you think our audience is voting for? Is it energy, metals, crypto, or the indices?
Not a personal selection from there. Certainly an interesting question here. I would probably make my audience guess. I'm wondering if the cryptos might be an interesting selection from the audience. So that'd probably be where I think they might be going. Certainly, metals also been fairly interesting here as well. So that might be between those two. But I'll guess the audience is going to lean towards crypto this week.
And Mr. Uncle Mike, same question for you, sir. Where, if you have a lean, by all means, and then more importantly, where do you think our audience is leaning, sir?
I think the audience is leaning towards crypto, and if I had to do something for where I wanted to get some vol fix, well, by all means, the metals. What better place?
All metals all the time, baby. Mr. Rock Lobster, take us home. I'm guessing you live and breathe in the index volatility space, so that's where you're hanging your hat, sir.
Well, me for sure. I think though our listeners though are getting a little gold buggy lately, because that's the kind of the pseudo way to do interest rates and stuff like that. So I'd go metals for our listeners, but vol for me.
Look at you getting a little savvy out here. Yeah, so far, again, it's early voting. This just went live before showtime. So there could be some big swings to come. But yeah, half, exactly 50%, saying the metals right now. Who would have thunk that a couple of weeks ago? Gold vol was about as dead as it could possibly be. We had said before on TWIFO, if you scalped it, it was cheap enough that you could make your living, you could pay the rent, as we say on that show, and do all right with it. But these days, it's sprung to life. Maybe a new vol regime for gold, I should say. We'll have to see. We'll check in on TWIFO in a little bit. Then a third of you we're staying with what brought you to the dance, staying with the index vol, so your spikes, your VIXs, your VXXs, all that good stuff. Only 17% saying energy. I thought WTI moving as much as it has. We have tanker attacks going on out there. We've got hurricanes coming in, all this crazy stuff. 1, 2, 3 punches going on out there in crude land right now. I thought that would maybe drive a little bit more interest. Only 17%. And still no votes for crypto. That's amazing to me, given how much it's lighting up. But again, this poll is about an hour or two old, so it's going to swing over the next couple of days. We'll keep an eye on it. Head on over to Add Options to make your voice heard. Let's see. We got a fun one here. Trey, since it's your first show back, we'll give you a fun fidelity-oriented question to kind of break you in a little bit again. This comes from Jigs. I like that, Jigs. Multiple jigs, not just one jig. He dances multiple jigs. He wants to know, what is the coolest tool that Fidelity offers for options traders? So Trey, you're the most well-versed in the Fidelity offering. When you're looking at the platform, when you're using stuff, or maybe when you're talking to people on the phone all day and they're telling you what they're using, what is it that really resonates with the people out there? Is there one particular thing, a screener, maybe some sort of trade entry tool or something like that really people tend to gravitate to?
Certainly a lot of good ones, and I appreciate the softball. I was worried I'd get thrown to the wolves the first day back after a month. So, but what I'd encourage everyone, our main trading platform, Active Trader Pro, is in and of itself the number one tool that you'd want to have. But within the platform, we've got a ton of different features. The one that I am always on and always talking to clients about is just our analytics tool. Within here, we've got multiple different selections, but, what's great about it, when we're doing the show, for example, or talking to clients about their options, very quickly, all on, one screen, one window, we can run through our option statistics, right? Look at, historical and implied volatility information, see, trade breakdown of option statistics throughout the day, today's biggest trades, as well as our profit loss calculator. Here as well. Every firm out there probably has their own, option pricing calculator. Ours is really great. It's because it's built into this same tool. But what I really like about it, you can put trades in there and it'll actually keep track of them here for you. So it allows you to, not only come through and run your analysis on what's going to happen with an option premium under your expectations, but, you jump in there a week later and, it reminds you of that trade you thought about. Even if you didn't place it and see how well you would have done. But this is all, all these are centered in one window in our Active Trader Pro platform and, gives you a ton of great information right there. But that's my go-to. That's the one I talk about. And, that's the one I'm always looking at when doing the show here with you guys as well.
There you go. I had a feeling you would know a good answer to that question. Now, see, we ease you back in. We're not savages here, Trey. We let you get your sea legs back, make you walk before you can run. Speaking of run, it's time for us to run on into our final segment. It is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. This is where we tell you what we're keeping an eye on for the rest of this week into the weekend. I'm actually going to cheat. I'm going to go a little bit beyond because we talked earlier at the top of the show, the Powell put already in place. That's a big thing people were watching for this week. But next week, we know a lot of your eyes are focused on the resumption of earnings hostilities. It kicks off really on Monday with Citi. Poor old Alcoa. Alcoa used to kick things off Now, oh, how times have changed. What a distant memory Alcoa is. Monday got Citi. Tuesday, Wells Fargo and Goldman. Domino's Pizza as well. And Johnson & Johnson. Wednesday, the old Widowmaker, Netflix, Abbott Labs, Bank of America out there. Alcoa now on Wednesday. So, yeah, it's already well underway by the time Alcoa announces these days. Our old friends Ally Financial. They're on Options Playbook Radio coming out on Thursday. They're Honeywell, a few others, and then Amex on Friday. So it's kicking off pretty hardcore. And then Tuesday after that, 23rd, we got the former stealth Apple, now not too stealthy anymore, that have sickened everyone with salmonella. Of course, Chipotle got big ones, and the big day everyone's looking forward to, of course, on the 25th with Intel and a bunch of other names, Alphabet popping off after the bell there as well. So if you're into earnings, we know a lot of you are, stay tuned. It's popping off real soon. Meanwhile, of course, head on over to theoptionsinsider.com. Check out the earnings move and earnings move results reports. It's all free. You can't argue with the price. And it'll tell you how things are being priced and how they compare to historical earnings reports. Interesting stuff for you to check out. Let's go back around the horn. Let's go the opposite way. Let's start with the lobster of rocks. Mr. Rock Lobster, sir. A lot going on. We got this, what'd you call it, this Chinese war thing going on. We've got a bunch of other stuff going on. What is on your radar for the rest of the week into the weekend, sir?
We got Chinese war thing going on. We had kind of a bond auction fail, I guess. I never know exactly what that means. It means, people aren't they weren't happy. I haven't seen TLT down 2 points in a couple days, or in like several weeks or several months or something. But yeah, ultimately we're waiting for some rate thing. It's the end of the week. Vol's at the low or close to the low of the week. It tends to be that vol malaise into the weekend. So probably not a bad idea to close some of your short vol trades. At least move your aggressive stops forward. I would say, and I think because we're waiting, right? We have more FOMC next week, and then we have some rate decision at the end of the month. So, to be honest, until the earnings start coming out and we actually see some money maybe flowing out of the banks, that would be the beginning of next week, and I think that will start to set the tone. And I think they're not expecting great earnings. They're expecting the first quarter, second quarter to be really rough. Second quarter to be really rough on companies because of the trade stuff. And I think, people want to see. They want to see how bad it is or how good it's going to be. And I think that definitely will push vol one way or the other. No question about that.
I love earnings season because you get especially the dregs of it. You get to see some names you don't really usually hear about. Like on Tuesday, we saw Helen of Troy reporting. Everyone's favorite name. I have no idea what they are, but it's a great name. Apparently, they seek out and build world-class brands, whatever that means. Sounds like a marketing and consumer marketing type agency, but a good name nonetheless. I guess you would expect none less from a marketing-oriented agency. Mr. Uncle Mike, sir, in addition to the Helen of Troy earnings that I know you were glued to earlier this week, what else is on your radar, sir?
Good point. 3,000 is one of the things I'm watching. Of course, everything macro. Earnings will be interesting to watch in the next couple of weeks. It'll just be refreshing to look at something besides macro Twitter feeds and things like that. So I think that's one thing that we need to keep a focus on. And just remember, when we're at the 3,000 level, the 2,000 level was fairly tricky to get through in the S&P. So just be careful as you're positioning yourself at the 3,000 level. That's one of the things I'm watching really closely.
And I'm watching more of Helen of Troy's products. Like, they make the hydro flask, sir. How could you live without the hydro flask? Who wants lukewarm water in your life? No one, I say. So get the hydro flask while you can. Hot stuff. All right. Speaking of hot stuff, Mr. Krypton got pretty hot there towards the end. Didn't work out too well for them. The last dad of Krypton, Mr. Trey. What are you watching for the rest of this week into the weekend, sir?
Yeah, certainly like everyone else, excited for earnings next week. Interesting to see what the financials do to kick us off. Tomorrow, though, still want to be paying attention to PPI. I thought it was interesting today. Core CPI coming in with an increase. At this point, Fed's everyone's pretty much got that prediction baked in for the end of July. The Fed futures right now 80% looking at a quarter percent cut. About the remaining 20% looking for that 0.5 cut here as well. So, PPI will be interesting. Consensus has it at negative 0.1 to 0.3, right? Do we, see an increase in that to maybe have some concerns about the inflation, or was today's CPI, really just a one-off type thing? So I'll be keeping an eye on that, and certainly what's going on with the Fed here throughout the rest of the month. But earnings time is always an exciting time for us, so it'll be great to have that back and have some of that nice busy phone calls here for us on the strategy desk.
Yeah, I'm sure that's a hot time for you guys on the desk, earnings season. So rest up, sir. You know who don't rest? The folks at Helen of Troy. They've been around 50 years. They were incorporated in 1968 in Texas. The fascinating things you learn when you tune into the option block. Unfortunately, listeners, that music means we're done. But before we finish, let's go back around the horn, the opposite of the way we came. Troy. I got Helen of Troy in the brain. Trey. we were just talking about some cool tools for the Fidelity options customers. If people want to kick the tires for themselves, where should they go? What should they do, sir?
Yeah, absolutely. And I hope Helen of Trey doesn't stick as a nickname. But,
that name doesn't resonate as well. You're right.
Fidelity.com/options. Check it out. Learn a little more about our options offering, our trading platform. Also, feel free to give us a call, 877-907-4429. Our trading strategy desk team, myself, the Last Emperor, any of the other guys, happy to help you out, discuss your strategy. We can also talk to you about some of the different classrooms and online coaching sessions that we offer.
Fidelity.com/options, listeners, is the place to go to learn more. Speaking of learning more, Helen of Troy's tagline, we elevate lives, we soar together. We are Helen of Troy. That's inspirational stuff. Speaking of inspirational stuff, Uncle Mike, sir, if I want to go to your website, I don't know if your tagline is quite as cool, but what do you got cooking for the folks out there, sir?
My tagline is not quite that cool, but go to stcharleswealth.com if you want to learn more about working with a financial advisor who actually knows what Helen of Troy is now. Feel free to contact me through my website.
stcharleswealth.com is the place to go. And yes, I believe we all learned a little something today about this fantastic 50-year-old name, Helen of Troy, and their hydro flask. Check it out. All right. That's enough free advertising for them. Mr. Rock Lobster, sir, if maybe you have a webinar coming up about the volatility of Helen of Troy, if I want to check that out, where should I go? What should I do?
Go to theoptionpit.com. Our vol newsletter, it's a very reasonable price for a several vol trades per week, sometimes even more, depending if there's anything going on. So you learn how to trade volatility in a risk-controlled way, and go to optionpit.com and go to our membership page and just sign up. Hey, I'll give you a month free if you give it a whirl. If you want to give it a whirl, let me know. Just say you heard it on the show, Andrew at optionpit.com, and my subscriber base is growing every month, so that's a good thing.
There you go. Go to optionpit.com to learn more. If you want to get a freebie, free month, maybe something else free, maybe you want a free profile of Helen of Troy, Andrew at optionpit.com. Hit the man up. You listen to him on the show. You know his vol analysis is usually pretty good. Obviously, he can't hang with me when it comes to the prognostication bullseye on volatility views. But then again, there are a few who can. Don't hold that against him. Sign up for his volatility newsletter over there. Andrew at optionpit.com is the address to reach out to. On behalf of the Rock Lobster and Uncle Mike and the father of the last son of Krypton, and indeed myself, I want to thank all of you for downloading, streaming, and subscribing. For those of you listening live, you got a rare treat coming up. We'll be coming back in about half an hour with Twifo. Going to be joined once again by our old pal, Mr. Russell Rhodes, a.k.a. one day soon Dr. VVIX. He's talking a lot of commodity vol these days, which is kind of fascinating. So stay tuned for that. We'll be digging into a lot of volatility over there in about half an hour. And meanwhile, if you're listening live, stay tuned. We'll pump some fun shows in there to keep you entertained and occupied. And we'll be back in exactly 30 minutes with Twifo. Otherwise, we'll see you back here tomorrow for a little bit of the old volatility views.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC.